43 years of doing mortgage loans, and up until about 2 months ago, never gave insurance a thought. Not one time, ever. And now recently, not just myself, but the entire team has had issues with clients not being able to get insurance. And so what can you do to help us navigate through this?
I've never seen anything like this myself either. Never seen a market completely dry up. And we're seeing the same thing that you are. A lot of our clients that are going through escrow closes cannot get insurance. And so our advice is the minute you go into escrow, start looking for insurance. But what's happened is that it's a combination of whether you want to call it climate change, but the wildfires have made a big impact on the insurance industry. The second is kind of a relationship with the Department of Insurance. It's a political office, so consumer-oriented, which is good, which is great for the consumer, but they have not been allowing for the last 3 years rate increases. So a proposition that was passed back in 1988, Prop 103, mandated that any insurance company that wants a price increase, a price raise, premium raise, anything over 7% had to have a hearing. So all the companies got into the tradition of filing for a 6.9% rate increase. Well, 3 years ago, State Farm applied for a 6.9% rate increase, and the Department of Insurance said, we want a 7% decrease. And so it started creating this lack of revenue coming in. And then you add COVID, which came through, which just increased the cost of rebuilding any claims that we have on a home. So now you've got this perfect storm of the wildfire zones that are just completely expanding in the state of California. We used to think it was Northern California that had the fires. Then they started encroaching down here. Now they're everywhere, from San Clemente to North Orange County, all the way through LA County, all the way up through the state. So they're becoming big impacts in the losses that the insurance companies are experiencing, along with now the increase of reinsurance. Now, reinsurance is insurance for insurance companies. So that cost has tripled, if not more than that. The insurance companies are not allowed to add the cost of reinsurance into premium. It was mandated again with this Proposition 103 that had to be part of their expense. So now they can't get the proper rate relief. So slowly over the last 6 months, smaller companies have been closing their markets until what happens, everyone starts navigating towards the other carriers, and they don't have the capacity for these amount of losses if we have another fire loss. We're looking at the weather that we had this year in California with all the rain and water. It's growing, so whether it's going to be this fall or next year, we are going to have the wildfires again.
The FAIR plan being affected, because a lot of people, including myself, thought the FAIR plan, well, don't worry about the FAIR plan. Tell me about that.
Well, the FAIR plan always was the last resort. It basically was created, the state, all the insurance carriers take a proportion of it. The FAIR plan was for those who can't find insurance at all, whether they had a number of claims or they're in an area where you can't get it. What's happening now is they're the go-to. So we've seen their rates triple in the last year and a half. So it's a fire-only product. It doesn't have liability. It just has fire-only. So what happens, the insurance companies built this policy called a DIC, or difference in conditions, so it kind of supplements so you can have a homeowner policy. But now you've got two policies that are running into the $5,000, $7,000, $8,000, $10,000 range, where everybody that goes into escrow is thinking $2,000, for a budget when they go home. And now they're finding out if they can get insurance, it's going to be in almost a $10,000 figure.
And this is very important for you real estate agents who are listening to this, because, sometimes when they go to a national lender, they get the national average on the loan estimate. They don't get the actual. So sometimes borrowers are comparing what Ted and his team send out there and go, oh my God, that payment's too high, John, when really that payment is realistic. Because, well, of course, realistic is better.
Contact us at our office number, 714-676-2007, or at our